Ladies and gentlemen, welcome back to the channel. It's another bloodbath out there. Now, if you've watched this channel over the past weekend, you would know I'm actually bullish for this week. But Monday and Tuesday are the wild cards. Let me explain it. We have Nvidia earnings, we have Walmart and Target earnings, we have economic data coming out on Thursday. But that doesn't even start until Wednesday and after hours when Nvidia reports earnings. You have Nvidia earnings Wednesday and after hours. Then Thursday morning you have economic data. Thursday morning you also get Walmart earnings. Now, the argument that I have made is we have so much uncertainty right now. And that is really causing the downside pressure in stocks. It's not necessarily that things are terrible, okay? We just don't know. Yeah, sure, the Fed is talking about the need to pause rate cuts. That implies the economy is doing well. But then Wall Street's expectations are we just hemorrhaged 60,000 jobs in October. We don't have clarity. Just getting the uncertainty alleviated is good news. Let me parallel a personal situation that you have probably experienced to this market to help explain this, okay? Imagine your wife or someone in your family texts you and says, hey, when you get home, we need to talk, period. And you say, what's this about? Okay, now imagine you have 6 more hours of your work left. Your anxiety is going to be going if you're a normal person, right? You're going to be like, well, what's going on? Why are they not, responding to me? Why did they say this? Then imagine you get home and you have to take your kid to the ER because they cut their finger and they need some glue in it, right? Something like minor. Your anxiety about what could have been is a lot worse than the actual outcome 90+% of the time. And that's the argument that I am making, is the uncertainty is far worse than what we're actually going to see. In fact, Nvidia just told us 5 weeks ago that AI demand has increased substantially in the last 6 months of this year. You think Nvidia is going to tell us anything different? You think Nvidia is going to call AI a bubble? Nvidia and Jensen Huang are going to say the exact opposite of that, right? We're going to get some really good news from Nvidia earnings. What does Walmart say? Walmart, back in 2007, they were the first real company to warn us about a recession coming. Do you think Walmart's going to warn us of a recession coming? It's possible. Walmart's CEO just resigned after like 13 years with the company. Maybe you could say that, but I would doubt it. I would think the CEO, if he thought a recession was coming, would try, to navigate the company through that. I don't know. Maybe, maybe not. But I don't think the situation is nearly as bad as the markets are pricing in. This to me seems like a bit of the final shakeout of this market. And we'll explain that in today's episode. We will go over all of your broader market news and again, go into further depth on why I think the later half of this week is going to be good and why this could actually start the end of the year rally. But Monday and Tuesday, and even to some extent Wednesday, until Nvidia reports earnings, are wild cards. It's really the second half of this week that, there's reason to be bullish, not the first half. So hit that like button as well as subscribe to the channel if you have not done so already. Check that link out down below in the description of today's episode if you guys want to come join the trading community. But with that said, let's get started. Now, before we get into all of your broader market news today, I want to explain what is happening today, okay? I'm bullish on this week. Why? Because we're going to have more certainty on the state of the economy. We're going to have more certainty on AI. And that is what we need at this point. We don't necessarily need great economic data or great news even on AI to get this market to move higher, because people are so uncertain, they're so fearful right now that we just need some kind of certainty. I explained this over the weekend. Like, if you get a text from your wife, let's say, or whoever it is, and it sounds serious, and they say, we need to talk when you get home. And then obviously you're going to say, what's this about? And they don't answer you. That's introducing dramatic uncertainty. That's going to give you anxiety. That's going to make you not want to come home, blah, blah, blah. The same works in markets. When you start to introduce uncertainty, you start to introduce bad things into markets. Anxiety, aka selling pressure. And people want to deposition in that environment. Well, we've had nothing but uncertainty for 50 days now as the government has been shut down, and we have no idea relatively how the economy is doing, and Wall Street believes we have no idea how AI is doing. That uncertainty starts to end this week, but Monday and Tuesday are the wild cards, okay? I'm firmly bullish on the end of this week. Once we start to get the uncertainty that dies down a bit. But Monday and Tuesday, there's not a whole lot happening, so we're still stuck in the same old, same old. Now, it wouldn't surprise me if tomorrow's a little bit of a better day before we get, the events, just because, again, you're so fearful. The risk is things get better, not get worse, I would think. But, Monday and Tuesday generally are a bit of a, just sleep through them kind of days. There's not a lot happening, and you're not going to get a lot of a cue from this market. Now, in broader market news today, Evercore ISI says buy Nvidia before earnings. They reaffirm their outperform and $261 target on Nvidia. This is something I've talked about for a while now, but Nvidia is scheduled to report Wednesday and after hours. With people fearful about the AI trade, Jensen Huang's going to tell you that things are getting better, not worse, okay? Jensen Huang on October 8th said this. He told CNBC that demand for AI is growing exponentially. He says that just in the last 6 months alone, he says, quote, this year, particularly in the last 6 months, demand of computing has gone up substantially. Why are people so fearful about AI right now? Jensen Huang said this 5 weeks ago, okay? He's going to say the same thing on Wednesday. So again, Monday and Tuesday, bit of a wild card day in terms of the markets. But after Nvidia reports on Wednesday and after hours, you're going to hear some good things. Nvidia's going to give you the typical beat and raise. And I think a lot of the uncertainty around AI is going to die down. Okay, people are going to understand that AI is still in the baby stages of its evolution. I mean, Jensen Huang told you 5 weeks ago what he's going to say on the earnings call. Okay, and I think Wall Street's going to react very well to hearing the same headlines again. Wall Street has short-term memory loss. Let's face it. Now, just to run through some headlines from White House Senior Advisor Hassett today, he says real wages have gone up. This move will continue. He says all trade deals have received exemptions. He says we are very close to reaching a deal with India. And he says it's time for the Fed to really be data-driven. And that's true. The Fed is not data-driven right now. The Fed is expectationally driven, right? The Fed just has their own expectations, and they're running wild with those, okay? The Fed is not data-dependent or data-driven right now. They're data-dependent when they want to be, when it fits their narrative, okay? But once we get more certainty on the economy, which we're going to be getting economic data like the September jobs report on Thursday, that could change the odds of a rate cut, which specifically will be good for a lot of your smaller cap AI stocks. And that's something we're going to be watching for Thursday morning. White House Senior Advisor Hassett also says, I am seeing mixed signals in the jobs market, positive signals in the outlook market. He says there could be a little bit of almost quiet time in the labor market. He goes on to explain that quiet time just means that companies are using AI so they don't have to hire as much, which, that's inevitably going to happen. But is that enough to cause a huge labor recession? I don't think so. Okay. But, but hey, could I be wrong? We'll see. White House senior advisor Hassett, when asked if he thinks there should be another reconciliation bill, says definitely at least next year. Keep in mind, funding only lasts, I believe, until January 30th. So this could be something that, comes up again in early 2026. Now, in some comments today from Fed Jefferson says it's unclear how much official data will come before the meeting, December 10th. Fed Jefferson says we need to proceed slowly as monetary policy approaches the neutral rate, and Fed Jefferson says it's still not clear how much government data will be available for the next U.S. central bank meeting. He says the job market shows a gradual cooling of supply and demand. Jefferson says current Fed policy rate is still somewhat restrictive. He says the balance of risks have shifted in recent months with increased potential downside to employment. And then he says upside risk to inflation have likely declined somewhat, with tariff effects likely temporary. So why are you not looking to cut rates? It's incredible that they can make these kind of, comments and then say, oh yeah, we need to be slow here. Like there's no problem. Just look at the expected jobs report for October, negative 60,000 jobs, and apparently we shouldn't be cutting rates. That's a crazy two-liner, okay? He says available information seems consistent with gradual cooling to both labor supply and demand. He says anecdotal reports about the jobs market have been mixed. Some firms have slowed hiring or cut back. Others have added employees and are investing. Now, today, you can see the odds of a rate cut are falling again from about 40% down to 34.8%. Okay, the odds of a pause are rising from 60.2% to 65.2%. And I explained this over this weekend. With this uncertainty, you kind of have the worst case scenario, right? Because if the economy is doing well, we don't need rate cuts and stocks can do well. If the economy is doing poorly, then you definitely need rate cuts. And right now, Wall Street thinks the economy is doing poorly, and it looks like the Fed's not going to be cutting rates. It's like the worst possible combination, okay? So that is also putting downside pressure on stocks, but we're going to get a lot more clarity on the economy this week. Again, we have the economic data that comes out Thursday morning. I know we're getting the September jobs report, but then the following week on November 26th, we're going to be getting personal spending and I believe retail sales data, and I believe the GDP report. We'll have to see on that. Who knows what we'll ultimately get. But this week, you're going to be getting Walmart earnings Thursday morning, Target earnings Wednesday morning, as well as TJX, Lowe's, and Home Depot tomorrow morning. So you're going to have a lot better of an understanding how the consumer is doing and how the economy is doing, okay? As we talked about over this weekend, Walmart is like the economic bellwether, okay? Walmart warned of the global financial crisis or Great Recession back in 2008 over a year before the recession actually started. In 2007, Walmart was issuing warnings about economic pressure on consumers, leading to a cut in its profit forecast for the rest of the year, although it continued to report strong quarterly numbers. These warnings indicated that consumers were feeling the strain of a slowing economy, with some analysts pointing to a possible recession, which ultimately began later that year. And you actually didn't have like the worst of the 2008 Great Financial Crisis until like Lehman Brothers and Bear Stearns started going bankrupt at the end of 2008. Right? Like September, October 2008, those firms started to go bankrupt. And that's when things started to get, worse. So Walmart is like the biggest economic bellwether there is. I have a feeling Walmart's going to say, yeah, things are largely unchanged. Okay, some of that probably has to do with more credit availability nowadays versus 2007, right? Credit cards were a lot less common in 2007, so there's more ability to spend even if it is on credit. So there's that argument as well, but spending is ultimately spending. We did get some economic data today with U.S. construction spending month over month that came in at positive 0.2%. The forecast was negative 0.1%, and the previous month was negative 0.1% as well. Now, the liquidity situation in the Fed reverse repo operation continues to look like it's getting worse. 7 counterparties only took $3.172 billion at the Fed reverse repo operation. So the moment is coming closer where the Fed is going to start adding to their balance sheet and doing QE, which is historically positive for stocks. Now, in a little bit of weird bad news today, Trump is undecided on Venezuela ground operation. President Donald Trump has not yet decided on a ground attack in Venezuela, CNN reports. He believes increased pressure, not military action, may push President Nicolas Maduro out, even as the U.S. deploys more troops and an advanced aircraft carrier. Trump also said talks with Maduro may be possible. Now, in terms of sentiment for this market today, you're still like down in the dumps, okay? It's getting worse today. The CNN Fear and Greed Index is coming in at 17, right? And to my point, again, you get Nvidia earnings, you get Walmart earnings and Target earnings and Lowe's and Home Depot and some economic data on Thursday, like the September jobs report. What do you think is going to happen here? Do you think Wall Street's going to get more uncertain or less uncertain? They're going to get less uncertain, whether that's good or bad, in terms of the actual data. It very much should be a positive catalyst for the markets. Alleviating uncertainty in and of itself is hugely positive, right? Uncertainty a lot of the times is better, is worse than the actual news itself. Again, back to the example. Your wife texts you and says, hey, we need to talk when you get home. And you say, hey, what's this about? And she doesn't answer. You're going to be freaking out a bit. And then what if she tells you, like, hey, we're going to the zoo on Friday? Or, hey, you got to take, the kids to the ER because they cut themselves. Like, probably your anxiety is worse than what the actual problem is, right? The uncertainty most of the time is worse than what the problem actually is. And the same is true for markets. Now, market momentum is fear, stock price strength, extreme fear, stock price breadth, extreme fear, put and call options, extreme fear, market volatility is fear, safe haven demand, extreme fear, junk bond demand in extreme fear as well. We did have the most recent AI investor sentiment survey last Thursday that showed 49.1% of investors are bearish, 19.2% are neutral, and 31.6% are bullish. So there's a lot of bears out there. And look at here. The percent of stocks trading above their 50-day moving average down another 5% today to 36.77%. So you continue to see internals of this market getting worse as stocks are continuing to fall below their 50-day moving average. This is a pretty damn correctionary level. And even the indexes, the NASDAQ, the S&P, the Russell are pretty well in correction territory already, with the better performing index like the S&P down 4.5% from all-time highs, but other indexes like the Russell down almost 7% from all-time highs. Then you look under the surface within those indexes, and the average stock is down 20+%, depending on what index you're looking at. So you've seen a lot of carnage in this market. And while I'm not going to guarantee the economic data on Thursday is going to be great, or what Walmart is going to say is going to be great, all I can say is I think the fear, the uncertainty is a lot greater than what the actual news will be. Okay? And that will alleviate some of that uncertainty, and that becomes a positive tailwind for stocks. I mean, even look at Bitcoin, down almost 27% from its highs that it hit in October, okay, like 6 weeks ago. There's a lot of pain out in this market, and I think it's about to get better versus get worse. It's going to be pretty hard to shock investors with downside economic surprises. Like if Walmart comes out and gives a recession warning, that would be bad. I don't think Walmart's gonna, give that dire recession warning that it seems like markets are being priced for at this point. And if they do, looks like that would be something that would prompt the Fed to cut rates, which is a positive. So how do they offset? We'll see. And that's just one example. That goes for economic data as well. I believe Nvidia earnings are going to be very strong. But Monday and Tuesday are the wild cards where you just don't have a lot happening. Home Depot reports tomorrow morning, but that's not the big one, right? Walmart's the big one on Thursday. So I think by the end of this week, this market's going to look a lot better than where it does today. And historically, when things like the CNN Fear and Greed Index are so deep in extreme fear, you've made money every time if you've bought markets with this much fear. Every single time you've made money, and a lot of money. Your returns are amplified if you're buying when people are this fearful. So let me know your thoughts on all of this down below in the comment section. Hit the like button as well as subscribe to the channel if you have not done so already. Check that link out down below in the description of today's episode if you guys want to come join the trading community and come invest with us. It's a long journey. No, AI is not a bubble. There's going to be opportunities within AI for a decade or two to come, and we are looking to capitalize on that, to find the stocks before Wall Street does, to invest in them before they're hyped up, and ultimately to make a lot of money. So come join us if you have not done so already, and have a great rest of your day, and I will see you in the next one.